Welcome back. Jack Dorsey surprising the Twitterverse by announcing he is stepping down as CEO of Twitter. He simply said it is time to move on, but some think that the move might have more to do with Dorsey's crypto ambitions. His other company, payments company Square, making moves to support Bitcoin in recent months. Joining me right now is IDX Digital Assets Chief Investment Officer Ben McMillan. Ben, it's good to have you. Thanks very much for being here. First, give me your thoughts on Jack Dorsey stepping away from Twitter. Do you think he will make different moves, expand his platform on crypto?
So that was big news. It was interesting, but not entirely unexpected. You know, Dorsey's been a huge driving force behind Bitcoin development within Square for years. You know, they were one of the first companies to put Bitcoin in their balance sheet. So Dorsey leaving Twitter to commit to the long-term vision of Bitcoin, you know, ultimately is very bullish in the long term. But, you know, it doesn't mean that the volatility is going away. And I can tell you in our conversations with our investors that are coming into this asset class for the first time, whether it's individuals, institutions, whoever it might be, the downside risk is top of mind for them.
Yeah, I think you're right. I want to get your take, though, on how regulations in the crypto world will change. U.S. banking regulators announced last week that they will be unveiling a roadmap next year. I've got a Cowen report in my hands here, and he says he thinks that the Washington establishment is laying out its vision for crypto regulation with the president's working group report. They think that they're going to issue an executive order on crypto regulations, and that the underlying principle is that crypto will be regulated similar to the non-crypto product it is trying to replace. What do you think the regulatory framework looks like for crypto in the future?
So that's the big open question. We actually just launched a risk-managed Bitcoin mutual fund last week. And so as a part of that, we've been in regular communication with the regulators. And, you know, what I can say is that our view is they're taking a very thoughtful approach in general. I think they recognize the importance of balancing the need for consumer protections with the need to allow innovation in this space, you know, especially after seeing what China did to effectively wipe out, you know, crypto innovation in their country. You know, I think the regulators in the U.S. really recognize that, you know, that represented a long-term blunder. And so I think anytime there's greater regulatory clarity in the form, especially in the form of a roadmap, that's good for investors, good for the long-term adoption of digital assets. I think focusing on stablecoins, which seems to be the focus of regulators, makes a lot of sense. And again, that's good for kind of the continuing mainstream of Bitcoin. But again, as one investor told me recently, you know, the regulator's job is to minimize the fraud risk, not the market risk. So that's a key thing to remember. And what we always tell clients is, you know, increased, you know, regulatory scrutiny isn't a bad thing, but it doesn't mean the volatility is going anywhere anytime soon.
Yeah, but I want to know what it looks like, because the Cowen analyst says that crypto companies are going to be better off in the long run until the government accepts crypto for taxes. Crypto must get converted back to dollars, and it is that conversion that gives the government power. He's also talking about this growing concern about the collapse of a widely used stable coin, and he says that could trigger a systemic crisis. What will the regulation look like, Ben, in your view? What are the important points of this regulation that we need to understand?
Well, I think that's why they're focused on the stable coins, because that is where, you know, Main Street interacts with the crypto universe is through stable coins. As you rightly put, Maria, I mean, it's really transferring from fiat to crypto is the point where the regulators have the most power. And so, you know, that's why we're seeing this kind of global rush for central bank digital currencies. I mean, that was ostensibly why China banned Bitcoin in the first place, was so they could launch their own CBDC. Yeah. And so I think that's where the regulatory focus is going to be in the U.S., which is why we're also seeing the FDIC and the OCC step in, not just the the SEC and FINRA.
Yeah. And I know crypto trading platforms will have to register with the SEC. Ben, thank you. Ben McMillan, we'll be right back.